Well, in his latest edition of the Greed and Fear report, Chris Wood of Jefferies this time around has actually gone ahead and written quite in depth about how he expects, and he's written in depth about how he expects that his long kept view of going long as far as cyclical stocks are concerned and going short as far as Treasury bonds are concerned continues to hold water. What Chris Wood says is that at this point of time, he believes that last year ago he was quite anti-consensus given the lockdown. Cyclical stocks had taken quite a bit of a hit. But Chris Wood had stuck his neck out last year and he had advocated going long as far as cyclical stocks are concerned and going short as far as Treasury bonds were concerned. What Chris Wood maintains is that this particular trade, while now it has become consensus because it's worked out quite well, he believes that there is further scope for this particular trade to work out even better in the coming months. Now, what he is saying is that the theme as far as Asia Maxima is Chris Wood as well as Greed and Fear's long-awaited recommendation or long recommended trades, namely to go long on cyclical stocks and short Treasury bonds. He believes that if there is ever going to be a tapering scare, it is most likely going to come after Treasuries have sold off even more and cyclical stocks have rallied higher. He says that in the meantime, of course, in America, it does not appear as though the policy is something that could go ahead and short circuit this particular trade. Policy remains accommodative, and he believes that the yield curve control at this point of time requires and sees quite a bit of balance. Now, Chris Wood, very interestingly, has actually said some more further trades as far as his particular thesis on go long cyclical stocks. What is it that is driving? He's saying that the cyclical rebound is something that will continue to surprise on the upside. He says that there is potential for further pent-up demand to come into the system, and he says that as massive vaccine rollouts happen across the globe, the massive pent-up demand once again will hit the system. He says that American household savings at this point of time continues to remain quite concentrated. He says that a lot of this money would now start coming back into the system in terms of demand. Chris Wood also very interestingly maintains that this is a classic case and this environment is quite classic in terms of how exactly inflation comes into the system. He says that the entire environment where there has been a supply shock to the system, mainly due to all of the lockdowns seen across the globe, he says that this actually gave a significant supply shock to the system in terms of supplies dwindling to a very low level. He says, given the fact that now opening up of the economy is something that's coming back, he believes that there is now a sudden demand shock and there is significant demand, and which is why he believes that this particular supply-demand mismatch is actually causing quite a bit of inflation, and which is why he's not really surprised by the rise of inflation.